And welcome back to Bitcoin Advisors channel. My name is Chris, and I'm bringing you this lovely cryptocurrency video right from Westlake Village, California, where it's always bright and sunny, and every day is a good day. And just bringing it in here from our last few days' conversations about cryptocurrency price action. I do want to remain with my eyes on the prize here. And what is that? The higher term time frames, which are there to rule the market. And what do we have here? So first things first, stock market is still pulling back and the dollar is rallying. So again, we know when dollar go up, bad for stocks, bad for risk assets like stocks and Bitcoin, right? And that was one of the theses we had going into the Fed meeting is we were bullish on the dollar. And I did call this one out here. I'm going to bring out the good old bull flag that we were talking about on the US dollar here on the 4-hour time frame. And we did said, hey, look, any kind of a 4-hour closure above this level right here, which this was a bit of a fake out. We didn't break back below the bottom side of the range, put in another drive of bullish divergence, hidden bullish divergence, that is. And we moonshotted up, almost hit our target to a T, right? And what is the target off of the break of this? That is coming in at $12.35. Some would say close enough is close enough. What else did we talk about here? Very likely, there was going to be a bit of a gap fill. This is the hourly time frame. We saw this gap up after the Fed meeting, and then we saw a gap down on Bitcoin's price action, right? And we know how the gaps like to get filled. And so what happened here? We overshot the gap. You know, if we would have rejected right there, which actually is what I was suspecting, then that would have been good, you know, a good indicator that prices were going to come back down in the short term. I do want to point something else out as well, is these good old Fibonacci retracement. I don't know how this guy came up with these numbers, but this is typically exactly what you want to see on a bullish retracement from the high to the low. And I kind of want to journal about what happened after the Fed meeting, going into the Fed meeting, right? And what exactly happened to Bitcoin's price going in? Well, we moonshot it up, you know, call that a moonshot if you'd like. And as the bad news came out, you know, a 75 basis point rate hike, Jerome Powell basically saying that the housing market needs to go in a recession and that they will not pause the rate hikes until job openings and job quits come into balance, right? So basically, I don't know if it's the same thing in your neighborhood, but in my neighborhood, there's a job opening on every street corner and you can't find any workers, right? Nobody wants to work. I think they're still on the COVID paycheck syndrome and they're sitting on their couch and they're not going back to work and they're silent quitting and all that other nonsense out there. So yeah, I imagine the freeloaders are still out there freeloading and nobody's feeling any pain in the markets yet because they just made all this money in crypto and in stocks. And here's a good reminder as to why. So anyways, back onto the Fed meeting. So bad news hits. Immediately, we had this huge leg down and a bounce. So just for myself, and why do I make these videos is I can put my own thoughts out on, call it my thoughts out on paper, but in verbal form, right? So whipsaw down, whipsaw up, and then back down. So that's likely to happen. You know, the trend will be your friend till the end of the trend. So going into the Fed meeting next month, and again, I don't recommend anybody trade anything like this, but I would love to trade it because boy, I saw prices just, you know, there's some opportunity if you're a highly skilled individual, and a good way to get wrecked. But on the other side of that, so prices whipped down, whipped up, and then it was like the follow through then over the next couple of hours as the bad news sank in, price came back down. We had a big wick right there. That's typically a reversal candle, a gravestone as they would call it. And that is a signal of reversal. And then, you know, you get a little bit more fake out down. And then as soon as we ticked above this high, right, we came up to the 9. But that's typically how it goes with the Fibonacci, right, is you get a bounce or a bull trap up to the 618. Then you come back down to the 382. If you break back below the 382, then that shows you reversal is in place and you're going to go back down to the bottom. If you bounce it, what happens? You go up to the 786. So we are in the throes of Fibonacci land right now with Bitcoin. And this is on the very, very short-term time frames. Honestly, I would not be able to call it except for volatility is ticking up and we are heading up to the bullish control zone after being away from it for some time. Typically, the first pass is a sell, and that looks like we had already a first pass. Second pass, really, it's the third pass that usually breaks it on through. So we got another couple more hours here. Actually, I think the day's about to close on CMEs with a big old candle, low volume, and bit of a fake out candle as well, as we did have a daily closure below this low. We didn't take out the wick. We took out this wick. We did not take out this wick. So we did not have a closure below. We had a big wick down and up, and that's what typically happens, is a little bit of a liquidity grab. And yeah, so daily time frame will cross up in 47 minutes above 19,600. Volatility is just getting above the 50 percentile. So, you know, do we get a little bounce here? Are we putting in any divergences? We got two lower lows. How would we confirm this as a lower low? We need a daily closure above this level, and that would confirm this as a low. And I would say 2 drives probably gets you a shot up to the top side of this triangle here at 21,600. That would be in the cards, especially if NASDAQ wants to bounce here. And using those Fibonacci tools again, what can we come up with here? That's on a bearish retracement. Let's do a bullish retracement here. Excuse me. And if we just use this low, you can see from this low to this high, right? Same thing. We come down to the 236 up to the 618, your bull trap area, and we close back below the 382. And what happens? You come back to the bottom side of the range, and that looks like we want to come down a little bit lower. Here's the one thing, you know, holding me back and showing there could be a bounce in around the corner is this purple 200 exponential. Typically, you know, that is a bouncy area. So do we get a bounce first? Possibly. The S&P did close down 20% from the highs year to date. Or was that December? So 21% down. And this is the futures market. So it is still open, closing in about 45 minutes. And where do we get bearish? Well, we're going to take out 36.59, and that'll look good for a bit of continuation to the downside. Volatility is still expanding. We are crossed down as long as we're below 38.26 for NASDAQ. And the 2-day time frame is crossing up above 38.75. So we got another 45 minutes. And do we get a little bit of a bounce here at the end of the day? Looks like she wants to come down, cross down on the 15-minute, cross down on the 1 hour. Excuse me, we just crossed up on the 1 hour, so a little bit of a victory signal there. And anyways, back onto our dollar, which continues to look bullish. On the daily, we are still up. On the 2-day, we are still up. On the 3-day, still up. And the 5-day is crossed up. Volatility is expanding. So notice that these price moves come in waves of 3. And notice Bitcoin, I'm not going to put that up right now. Bitcoin, volatility is continuing to expand. Oh, and then we're closing the 5-day today. And will remain crossed down as long as we're below $20,014. So that does give me the downside bias. And like I said, we've been looking for about a 42% move to the downside based off that stochastic momentum volatility trade. And man, I got to give it credit to Mr. Crown, King Crown. He is the man. You know, I just drag along on his coattails and kind of use his analysis to, you know, make my own. But we do have the bearish divergence, which will be confirmed today with any kind of a closure here or lower. What is bearish divergence? Well, price is making lower highs and the RSI is making higher highs. Wow, is it going back all the way to this point? Yes, it is. That will be the third drive. So lots at stake here in the next 3 hours and 32 minutes on spot price action. Let's see if we got it on the CMEs, which are going to close here shortly. 5-day looks a little bit different here. So the 5-day already closed down. And volatility is just above the 20 percentile, which is our expansion read. And just for kicks, where did we begin to expand? Right here. And that, let's see, where does 42% down from that candle get us? 42% down. Ooh, there it is. 11,590 on CMEs. And that's still going to be in play here for the next 5 days. Remember, today is Thursday. So we are coming up on a weekly closure for CMEs tomorrow and will remain crossed down as long as we are below 19,872. So that would be a warning sign. That would definitely be a warning sign that we could get a big bounce here to the upside if CMEs does cross up tomorrow. However, with the 2-day price action, 2 days crossed up, but we don't have the low volatility read on CMEs that we do on spot price action. Spot price action is crossed down, and again, the higher term timeframes are going to take over from here. And I do believe the dollar is going to continue up to our target of 112. Let's just see if that lines up with any fibs here on the 2-day time frame as well. Going wick to wick. Oh, what do you know? Lines up perfectly with the 1618, and I'm willing to bet we have some drives of hidden bullish divergence. And again, what is that? That is when price is making higher lows and the RSI is making lower lows. So where is the last low? Would I consider that a low? It's kind of tough to do that, but that would give you the 3 drives at a minimum. That's definitely a low, but that doesn't qualify. So again, from this pivot right here, you've got all these higher lows, 1, 2, 3. That typically does give you the drive to the 1618, and you got 1, 2, 3 lower lows. So the dollar is ruling the market right now. Absolutely. The dollar is in full force, full effect. Something else to note is the 10-year jumped 5% today. The 2-year yield on bonds, U.S. Treasury bonds, jumped 1.6. The 30-year up almost 4% today. Good luck getting a mortgage right now, guys. Good luck, Chuck. So when's the last time we're in quite a bit of a breakout. We took out this high right here. So that means probably some, fire and mortgage rates. Good luck getting a refi right now. Coming back to this pivot right here. So if we take that out, mortgage rates go up to 4.5%, 4.75 it looks like on the 30-year Treasury, which means mortgage rates are going to be much higher than that. So when bond yields go up, essentially it's a flight to safety. People are going to dollars, and that also gives us the bias that the dollar is going to continue to go higher, alongside gold going lower. And the weekly close for gold here, which we might, again, get a little bit of a fake out off the purple 200. But ultimately, I would be looking for gold to head down to 1450 probably over the next 6 months, alongside the dollar heading up to about 120, which is kind of our macro target on the US dollar, and does give us the bias for some more downside price action for Bitcoin and for equities. Okay, I think I wrapped up my thoughts here. Last thing I'm going to leave us off with is Mr. Ethereum, which Ethereum is just a higher beta Bitcoin, right? It's going to do whatever Bitcoin does. And we had been talking about this over the past few weeks. And we did say, hey, look, if this pivot breaks here on the daily time frame, right here at 1440, which was one of our targets, or 1420. I think we had a 1440 target. If we had a breakdown below that level, very likely we're going to come test these highs. What do you know? Hit them to a T, getting a bit of a bounce on the daily time frame. We are crossing up. Volatility is coming down, and there is a bit of, well, there's at least one drive, but I wouldn't call that a low. So yeah, I would not call this a low, not a confirmed low. That was not a confirmed stop and reverse point. So I imagine this is a bit of a backfill on the daily, and we'll cross back down below 1295. The 2-day is still down. Volatility is climbing, and so what do we use those fibs for is to find out where the bull traps and bear traps come in. And weak bounces come up to the 236 and 382. Standard bounce up to the 0.5. And the bull traps at 1550. So with momentum to the downside and no divergence in sight, I do think that Ethereum is going to head down to this level right here, mediated with a break on a daily closure. Even a 4 hour is probably good enough for me. Let's take a look at the 4 hour. 4 hour did just have a bearish engulfing close, and got a little bit of follow through, but not much. Pretty weak. Ethereum Classic also pretty weak bounce, and holding this trend line down. And let's just put a measure move on this guy right here. And where do these typically descending triangles have a 75% chance of breaking to the downside? How do you measure this out? Well, you take the 50 percentile, and they usually break 75% full. So let's say we break right there, or maybe give it one more tick. And looking at a target of 2576. Now let's see if it lines up with the good old fibs. And so what I would do is take a bearish retracement from the high to the low. And the 1618 is there. And yeah, that's the 1618. Sorry, there's the 2618. So that does line up pretty good from this high to low on a bearish retracement. That's the top side of the range, and here is the bottom side of the range. So I would check this out right here and say that, you know, any kind of a 4-hour closure back above this guy is going to lead to a pretty healthy move to the upside, which you could just pretty much apply that right there and say we get a shot to the top side of the range. If we do get a 4-hour closure above there, I'm looking for a pretty nice move up to probably test the bottom side of this local low right here, somewhere in here. So, and that would tell me, yeah, something definitely new is going on in the market. Ethereum Classic getting a bit of a weak bounce compared to Ethereum. Yep. So that's it for today, guys. I hope you enjoyed. Make sure you like and subscribe. Post a comment below if you have any questions. And I hope to see you guys soon. Have a blessed day. Take care.